Morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. You know, I thought all day yesterday, I thought it was Wednesday. Don't you hate that? And then it was like, oh, wait a minute. It's only Tuesday. Well, it's Wednesday now. Happy hump day to everybody out there. Try to make it a great day. We got a good show lined up for you. As usual, a lot of things happening to talk about. What's going to happen with tariffs on Tuesday. You know, the Trump administration saying maybe not quite reciprocal is the latest. Here's the good news. I guess there's going to be more confusion. We won't know the answer till Tuesday, but maybe it's not going to be the absolute worst case scenario. But then again, he may say something in 10 minutes that is the exact opposite, but at least for right this second, Jason, he's saying, hey, maybe a little less than reciprocal. Remember yesterday, he kind of alluded to it. Hey, we're going to start with, and then we'll ramp it up a little bit later. So my guess is some of these places where, I should say my guess, my hope that, like I said, a lot of this stuff, you can't just move it. Right? It'd be great. Oh, hey, you got 30 days. 60 days, and you got to move it. It doesn't work that easily. So maybe some of these industries, that'll be a little more complicated. Maybe they'll start out a little less, and they'll get a little more time. But I kind of feel like this tariff thing, Jason, I don't know that it's ever going to go away with the Trump administration. That's just kind of what it seems like, right? We're supposed to, every time a deadline comes up, we get some. But then we also get there's more to come.
Yeah, I've seen some projections, some early projections of the tariffs at certain levels and what it would cost the average American, and then balance it off against the tax cuts. And doesn't look good for the less wealthy of America, with the bottom 90% or more. And so it's a tax, Joe. It's a tax, and we have a broken economy. And this is I don't know, Joe. How long do you think the average American that doesn't listen to this show, how long are they going to think that anyone in Washington is actually trying to help us? That these tariffs are going to help us, and that things are going to get better? Or do you think some people will wake up a year later with the tariffs, if they're still roaring? Are they like, you know what, this sucks? And are you waking up late? If you're trying to change what you're doing, because these tariffs are going to be painful. These projections I looked at, Joe, they look painful for people. The prices of things, with the inflation we already have, and you add the tariffs onto the prices. People are going to be complaining a lot more than just eggs, right, Joe? And if geopolitics gets involved and suddenly you have $7 a gallon gas, it's going to be crazy, Joe. We got some crazy stuff getting ready to happen this year and next year.
Yeah, I think we're going to have to see. The one bad thing, if with this whole tariff thing, and obviously the fact that it hasn't been very easy to figure out, right? I don't know that they're making it up as they go, but it kind of feels like they're making it up as they go. But the big thing, remember, the Fed was really hoping, because they dusted off transitory again. The one problem with, we did a little bit, then we took a break, then we did a little bit, and that it seems like there's never-ending amounts of tariffs. It's hard for it to be transitory that way, right? So it's almost better, like the Fed is hoping, hey, get it all done, and then a year from now it'll be gone because the damage has been done. But we'll have to see. We've been waiting. Oh boy, just a lot. We've been waiting for the rating agencies. We just heard from Moody's yesterday. They're not impressed. We'll talk about that And again, I think for everybody out there, we're kind of in this this area. We don't know what's going to happen. Wall Street, it's hanging in there. Of course, the most recent little rally here, not a lot of volume, so not a lot of teeth in it. But what comes next? What is going to happen? Are we going to be in some sort of, is it going to be just a slowdown? Is it going to be a recession? Is it going to be, a mild recession? Is it going to be a big recession? We don't know about a budget of any sort. We have no idea what the debt levels are. And there's a lot. I mean, that's all. We don't know what's going to happen with the war in Israel. We don't know what's going to happen with the war in Ukraine. We don't know what's going to happen with Iran and Venezuela now, right? They're back in the news. A lot of unknowns and very little knowns. That's kind of the problem. So like the tariffs, we continue to have very little knowns. And I think this is why we continue to see the gold price doing what it's doing. What is it now? I don't know what. We broke 3,000, a week and a half ago? And really, we haven't gone below it since. Gold's just consolidating and looking very comfortable above 3,000. And I think, look at all the unknowns. And most of these unknowns, 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Wednesday. We've got a mixed market right now. The Dow's up 150. The S&P's down 20. The Nasdaq's down 200. The 10-year note, big move higher here today. 435 and change, almost 436 now on the 10-year. We've got crude oil moving quite a bit higher here, up over $1, back above $70 a barrel. A couple of things. Crude oil inventories, big drawdowns. They're barely, they added just under 300,000 barrels to Cushing. The problem was that still left them short over 1 million barrels. So the process of refilling the reserve going the wrong way, right? Hey, we put some in there, but a lot more of it came out than we put in. Has crude oil on the news, and obviously, right, the stuff with Venezuela, China today kind of saying, hey, we're going to stop purchasing for right now. They're waiting for the Chinese government to make a decision. That it's not a small amount. That's 500,000 barrels that China was buying a day, apparently, from Venezuela. So it's got to come from somewhere. When we look at the gold markets, gold's flat right now, 30.20, 3,020. Silver up a little bit here, 33.75. So silver looking really good. I really like how gold and silver are performing, really. We're getting, I guess you could call it consolidation in gold, Jason, because it's been a while since we're oh my gosh, for 4 or 5 days now, gold's kind of been the same price. They bounced off 3,000, right? We got that higher low. Now it's been consolidating. Silver did a really nice job. We didn't go back to $31 or even $30. Silver stayed pretty much about a day and maybe 2 days below 33, came right back. Now up, closing in on $34. And I'm just going to tell you guys, get diversified, get more diversified. When we're talking about problems. Okay, I shouldn't say problems. Unknowns, right? We don't know. Are we ever going to get a budget? Can they get tax cuts approved? A lot of people putting big hopes on Doge. Okay, I love it. I think it's a great thing. We should care about where our money's going and get rid, and I think this is what Doge has gotten rid of a lot of okay, we don't need to spend money on this and we don't need to spend money. But it wasn't a lot of money. I wish it was, but it wasn't. Now there's been a lot of layoffs. The Treasury now said, hey, we're going to lay people off, right? Every agency's got to lay people off. How much money can that be? Well, I did some digging. To find out. About 8% of the federal budget is spent on payroll. Okay? So the problem with that is even if you cut 10%, which I don't know that they're going to get to that number, right? They're talking about, maybe 5%.
It's only 1%.
Yeah, so you're sitting there in a situation where, okay, well, maybe you can get $100 billion. Maybe. Right? That's kind of like best case scenario. Worst case scenario, we're looking at about 50. And we haven't found, the big, there's been a lot of headlines, a lot of, this fraud, that fraud, and it really wasn't fraud, right? That was the problem, right? It was just really sloppy bookwork, right? And, you can, if you were running a big business, you would not do it this way. I think we'll be lucky to get $200 billion out of Doge. That's my guess. And I've been saying that all along, Jason.
Just listening to what you said, well, maybe they can cut 10%, employment in the government. And then you said, you're being generous, you're saying, well, maybe that could cut $100 billion. And you're talking annually. So I'm thinking, no wonder these people fight so hard for their budgets. If 10% of the federal government is earning $100 billion, there's something wrong there. There's no way that's wage earning, Joe. There's something way bigger attached to that.
And again, I'm being...
No, I know what you're saying. I know, but it's like...
overly, when
you might be
look
right,
at
listen, it might not just be direct wages. Who knows what else is attached to the government payroll, right, Joe? But you're probably right. Is 10% of the government payroll $100 billion in savings? Because that can't be direct pay, but think about it. I saw a graphic that said for every
probably closer to 70, but I said 100 because I wanted to keep it simple. Yeah, but the government, just to give you an idea, they're spending about $700 billion on payroll. That's what the number comes out. So 10% would be like $70 billion. You
should be able to pay for the entire military. You should be able to pay for all of it. I saw a graphic that said if you have, for every government employee that you release, it affects up to 5 non-government employees that are directly attached to that in government employee. So I'm wondering if that's part of that budget. You get rid of one government person, you're getting rid of 5 possible programs or indirectly associated companies to that one, average one employee. So that's a lot of money for just, how many employees? I know there's tens of thousands of government employees, but $100 billion, $200 billion, you're talking $700 billion for all of them. That's ridiculous. It's just, no wonder Washington, D.C. had up years. The only place in the country during the 08-09 housing crash, the only growth area in the country was Washington, D.C.
So, why am I boring you with this stuff, right? I don't want to hear it. I'm bored with it. Just say, you could have said it faster, I guess, right? Well, let me tell you why. Because Moody's yesterday. So we've been waiting. Remember, for the last couple of weeks, I'm like, what are the rating agencies going to say? Because, as you know, when you get your rating cut, it costs you more to finance your debt obligations. Okay, so we used to be AAA. Now we have a printing press and we still can't be AAA. But Moody's on Tuesday said the United States fiscal strength is on track for a continued multi-year decline as budget deficits widen and debt becomes less affordable. So Moody's has already said, okay, we've looked at the plans. Right? Because we know, Donald Trump, they made it very clear. They know what they want to do. Right? And Moody's is saying, okay, wait a minute. This is going to be multi-years more of decline. The agency reported that the United States fiscal health deteriorated further since Moody's lowered its outlook on the United States AAA rating in November of 2023. So Moody's has said, okay, we warned you over a year ago, and it's only gotten worse. And now when we look out over the next handful of years, it's going to become even worse. They're saying the decision to impose tariffs has sparked fears of higher price pressures and a sharp economic slowdown. We'll see, right? This is one of the unknowns. How slow? Here's the problem. Okay? Any slowdown means what? Well, it means less revenue created for the government. Obviously, less people working less hours, less government spending, whatever it may, whether it was wasteful spending, non-wasteful, it was still spending. That means lower revenues coming into the government. This is what Moody's is worried about. And even in a very positive, low probability economic and financial scenario. So think about this. So Moody's goes, okay, we're going to take the most positive outcome, which, by the way, has low probability. Okay, so Moody's is like, okay, we're going to take a rosy scenario. Chances of it being this are next to nothing. But even under that, so let's call that best case. Debt affordability remains material weaker than for any other highly rated sovereign debt. Wow. That is not a good thing to say. So they're saying, we keep saying that we're the cleanest dirty shirt in the laundry. Moody's is saying, well, when it comes to highly rated sovereign debt, no, we think you may be the dirtiest shirt. If projected debt to grow, it projects gross debt to gross domestic product to rise to 130% from the 100% that it is today. So they're saying the next 10 years, under the best scenario that is highly unlikely, this is where the U.S. debt's going to be, guys. I'm telling you, please. I know it's boring. I get it. Go back to what I was telling you all along. It didn't matter who won. Didn't matter. Now, it may matter at the border. It may matter with tariffs and let's call it equal trade. And it may matter with war and all this stuff, right? And let's face it, Donald Trump signs an executive order every day on something, right? He's doing something, right? Where Joe Biden, man, no one even knew where Joe Biden was, right? So I get it. But Moody's is telling you it doesn't matter. They're saying by 2035, interest on the debt, it's ridiculous, will be 30% of all government revenue. And I'm going to tell you right now, Moody's is being kind. You know where it is right now? Not quite 10%. And well, of course, that's just interest now. It just keeps climbing and climbing and climbing. Can you imagine when all of a sudden half of the money you bring in goes to the interest? Right? That's like hey, I made the minimum payment. That's like less than the minimum payment on a credit card. By the way, all the rating agencies are going to say things like this, Jason. I think it's just a matter of time. We're going to get another ratings downgrade. I think this is just where we're at. And listen, this is what they get paid to do. They have more access to data than I could ever have, Jason could ever have. And they're literally telling you, the most positive and unlikely scenario, we're screwed. You know what they didn't say? What happens if it's, I don't know, just in the middle? It's not the worst one. I don't even want to know what the worst one looked like, because you know they have it, right? I don't even want to know. But what happened, it was just, okay, yeah, it was a recession, it wasn't horrible, this, that. What does it really look like? This is why, you know what, I hate to say it. People are starting to talk about $10,000 gold. This is why. We'll be back after the break. 800-951-0592. And, well, I guess this probably shouldn't surprise anybody. Almost 10 million, 9.7 million student borrowers became past due on their bill now that they finally have ended the COVID-era payment pause, according from the latest estimate of the Federal Bank of New York. I don't mean to laugh, but that's incredible to me. Almost 10 million people who haven't had to pay their student loan debts in all of this time. The second they had to make a payment, Jason, they couldn't do it. Couldn't make a payment. They said that student loan debt hit, they're saying past due federal loan debt sits at almost 16%. I mean, that's just incredible. But here's the thing. They're saying there's still another 16% that's in deferment of some kind. In other words, they're supposed to be making payments, but they're eligible for some type of a deferment. Jason, you're literally talking about over 30% of the people that got a student loan are making no payments right now, according to the New York Federal Reserve. None. Zero.
Yeah, I saw more information about people not making their credit card payments, not making their car payments, and also minimum for the people that are paying the credit cards, minimum payments are dramatically higher. So that, hey, things will get better. I'll be able to make a bigger principal payment and get that credit card paid. But right now, let's just do the minimum to get through next month. It's getting dramatically worse, Joe.
I'm glad you brought it up, because that's the Philadelphia Federal Reserve releases that information. Not that that matters, but they're the ones that do it. Kind of interesting. Almost 11% of all credit card payments, and this is how behind they are. This is the end of the third quarter. We're only making the minimum payment. On top of that, they said that balances past 30 days past due jumped to over 3.5%. So you start adding these together, right? And now all of a sudden, by the way, that's double. The amount of people 30 days or more past due has doubled from 2021 to today. And the amount of people making the minimum payments is up about 30% from there. So that kind of gives you the idea. Even uglier, the charge-off rates for credit card issuers like Capital One, Discover, some of the ones that maybe you can have a little worse credit than others, hit their highest charge-off rates since the financial crisis. So we're starting to get more and more of this data now taking us back to the financial crisis, and that's where we worry, right? And I think this is where Moody's comes out and says, hey, guys, well, we've got a problem, and it's not just us. How about the UK? We've been talking about how much problems there are. Look at what Moody said about our debt rating and how bad it looks. It's so bad in the UK, Jason, they're starting to cut welfare. This is where we're at. How soon until this happens? You hear Elon Musk talking about cutting Medicare and Medicaid, talking about cutting Social Security. Jason, we're getting to this point. These things are going to happen. And in the UK, they had no choice. They couldn't pass it. They got to. Now you're going to start cutting welfare payments. That's never a good thing.
It's unfortunate that there has to be welfare payments to begin with, but that's the world we live in, and the people at the bottom are already weighed down by the way how the system works, and so if you're having trouble in your economic system, it's not ours, it's theirs, and if their economic system is making it for the bottom of the bottom, they can't simply live, Joe. That's a clear indication that the next tier up is next, right? If you're the poorest of the poor and you're getting slammed by what's going on, then the next tier up, they feel it. And then you get closer to the middle class and the upper middle class, they're going to feel it. And when things get really rough, Joe, some of the wealthier people, not the billionaires, and the multimillionaires, but, the wealthy people of this country, the upper middle class, they're all going to start to feel it, when things get really tight.
I know it's not a great news day. The only thing great is if you can add to your gold and silver holdings, or you don't have to sell your gold and silver holdings. All of these things are positive, and this is we started the show about unknowns. So many unknowns. We just don't know, and it doesn't seem like, gosh, at 30 days. Okay, well, no more than 30 days. But then as the 30 days gets here, well, they start changing the rules again. It's like the tariffs next Tuesday. We're, okay, here they all are. Finally, we can figure it out. Well, no, now that's not going to be the case. Well, we're going to do some, but then we're going to do some more later, right? And I'm just saying there's a reason why. Can't afford it. Can't afford to do it. And we start thinking about, okay, wait a minute. Crude oil's back above 70. We're not filling the reserve. Well, we tried and it didn't work, right? I guess, right? Now we're going to cut off Venezuela. We're probably going to bomb Iran. That's coming, right? Russia, Ukraine doesn't look like there's a solution anywhere. I haven't heard a peep. Are we going to start sanctioning their oil? I don't know. I don't know what they're going to do. Then you start looking. You guys know the situation with gold and silver. There's no product. And I'm not talking about, there's product here. You call me, I got $20 gold pieces. I got gold, I got it all. Silver Eagles, we get everything. But I'm talking about real product. People that need metric tons of it. It's not there. Copper. When I think about important metals, right, silver and copper come to mind. Like when you're talking about industrial metals. We talked about the copper price last week. Well, apparently the copper market is getting into what they call backwardization, and now the global demand forecast, it got worse. Let's just say that. I'll update you. How high is copper going to go? That's coming up next. Joe and Jason on this Wednesday. Today, gold. Tomorrow, we're going to do silver. We're going to have a silver show. We got updates on silver supply, silver demand. Let's just say I'm going to probably be light at $3,300 gold. Not probably. I'm going to be light. I said $40 silver this year. Probably going to be light. But tomorrow we'll do a big silver show. Be ready for that. Today I got those $20 gold pieces. Remember, I got over 100 of them the other day. You know, that's the best part. You know, when you've been in business as long as we have, you just have so many customers, and customers, they pass away, their gold gets passed down, people want to liquidate, right? Because they're, you know, look at what we're just talking about. The kids are like, yes, give me the money, oh my gosh, right? It just means great deals for you. Listen, gold right now is 30.18 right this second. Just hanging out. $20 gold pieces, $3,095. 10 or more, $3,085. 20 or more, $3,075 at 800-951-0592. And copper, which just, you know, exploded above $10,000 a ton. Bloomberg is now saying that we've got horrible backwardization. This is exactly what the same problem we had with silver and gold, right? It's all coming to New York. They're now saying global demand will outstrip, this is for copper, will outstrip supply by 320,000 tons. Inventories are going to be significantly depleted. There is something exceptional happening in the copper market. It is absolutely unreasonable to think that copper's only going to go to 12 or 13,000 a ton. I'm like, what? By the way, that's huge. Anything over 10,000 is huge. And they're saying if you're forecasting only 20 or 30% above that, you're out of your mind. It is difficult to put a price on exactly what is going on in the copper markets. We're going to start at 15,000. Okay, when? When is 15,000 going to happen? Guess what they said? Yeah. Could be as early as the next couple of weeks. They say the copper price is going to average 15,000 in 2025. If it's at 10 now,
it's 50%.
To get to an average of 15, right? You know, okay. Well, if I had a day of 20 and a day of 10, the average would be 15. Could we see copper prices approaching 20,000 a ton? Jason, that blows my mind when we sit there and we start thinking about what is going to be happening in these. And they're saying the same thing. Everything's gone to New York. Everything's in the United States. The rest of the world is scrambling for product.
How many tons shortage this year?
320,000.
320,000 tons shortage times 2,000.
Yeah.
That's 640 million pounds of copper shortage. They need to find 640 million pounds of copper.
It gets worse. China now.
Sprinkler systems are on the clock, Joe.
Has said, right. China now is saying, you know what, we are going to start adding to our copper stuff. They can't get it. Right, everything has been flowing into the United States, but they're saying there's not enough copper to go around. And Joe, you don't sell copper. You're right. I could. We actually have some copper.
How about not yet? How's that sound?
Not yet, maybe. Right? Yeah. Right. You know, if they get expensive enough, guys, I promise you. if the copper price goes up 30%, which would be $13,000 a ton, that's crazy what it'll do to the gold and silver prices. But they're not talking about 13. Hell, they're really not even talking about 15. Because they said it's going to average 15,000 a ton this year. Which means they're saying copper prices could easily double from here. And this is why I'm saying I'm wrong. We're not going to be at $3,300 gold. We are going to be so far beyond that, it is going to be ridiculous. Buying these 20s at $30.95 or $30.85 or $30, right? You buy 20 or more, $30.75, $3,075. This is a bargain. And it's hard to look at because you're like, but Joe, God, the price went up $1,000. Yeah, but you know what? They wanted to believe their nonsense during COVID, right? You think about gold, right, after COVID, right? Jason, how many years did gold sit below 2,000?
Oh, yeah.
Right?
Yeah.
3, 4, 5 years, something like that. All it did was, okay, it should have been 3,000 years ago. It's just catching up. By the way, someone said inflation adjusted back to the remember 1980, gold at 800? You adjust that for inflation, gold would be $3,500. So there's plenty of room to run here. 800-951-0592. Looks like Wall Street now all in negative territory. Final segment coming up. Remember, tomorrow, Thursday, we'll get jobless claims. I'm not expecting anything, right? It hasn't, all these layoffs, and seemingly it doesn't change. But if it is a higher number, right, that could move some markets. That's going to be the big piece coming out tomorrow. But right now, Wall Street has given up those gains. The Dow was up early today. Right now, it's down 50, but it was up almost 200 points earlier. The S&P down 44. The NASDAQ is down almost 300 points. Volume has been light, so be careful here, right? We could get if volume picks up here, can we get some of these bigger down days? Because that's kind of what it feels like right now, is the up days are light volume, and then the down days come in with the heavy volume. We'll have to wait and see. But $20 gold. Tomorrow we're going to do some silver, and we're going to be big update on the silver market. But think about the news today. Moody's. Even the best scenario, which we don't think is likely, the United States fiscal picture is not good. Get ready for a downgrade. Then you got Bloomberg talking about copper. Don't be shocked if copper doubles this year. Doubles in a year. Right? These are the types of moves that we're up against here, and we still don't know. We still got all of these other unknowns. Get this gold while you can. $20 Liberties. We've got some Saints as well. $3,095. 10 or more, $3,085. 20 or more, $3,075 at 800-951-0592. Now Dow's down 100, so losses are starting to pick up here. Walgreens has just submitted, Jason, 500 stores in their locations that are going to be closing. So as we expected, right, Walgreens going to be closing 500 to 1,000 stores every year for the next 3 years. Today they just came out and announced 500 of them so far that are going to be closing here in the next 3 to 6 months. So we'll see how that affects everything. And commercial real estate, by the way, defaults continuing to rise. But no one wants to talk about that either, Jason.
No, those are all economic indicators in the negative. And, I find it interesting as we're closing out the show. You're talking copper. At the end of that inflative cycle in the 70s, the early 80s, it was 1982, and they took the copper out of the penny. It was inflated. Things got everything on it hugely inflated, and then 1982 was kind of the last year that it was really staying kind of hot. And that's when they put the zinc in the penny and yanked the copper penny. They changed the composition, and that copper penny has 3 cents worth of copper. If what Joe says is going to happen, that's going to be 4.5 cents for every copper penny. And you may hear us come on the air one day, and it's like, hey, we got bags of copper pennies. It's just not a good price point for the shipping and everything else that's involved. But once it gets to a certain point, remember, Joe, silver wasn't really a great thing to have to ship around. And when you want to an ounce of silver is $1 or $2, but as silver got it to $5 and then got to $10, it was a real thing. Well, copper's starting to tickle the fancy. So a lot of the bigger retailers are now offering copper pennies now. So you have to pay way too much for them, Joe. But that's how far down the road we are with inflation.
800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.